Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Monday, May 19th, 2025. Let's take a look at the charts. I don't show the buy signal anymore, but there was one a week and a half ago when we closed above what is at the time was the mid 290s, anticipating upward continuation within 2 to 3 weeks. It took about a full week, actually less, more like 3 or 4 days before we reached it. The low 350s, 351.39 to 351.51. I'll show that in a moment, and 360.53 as the clear buy signal into June, July, August, if settled above. Until then, this is the zone for taking profits on a long position that may have been established earlier, whether that was 3 to 5 days earlier or 2 to 3 weeks earlier, whatever the case may apply to you. But this is an area to respect for its ability to contain buying through the month of June. And from here, we can fall away. In fact, it is holding below this area that we do maintain a 285.55 2 to 3 week objective that is rising through time. So this is kind of your 2 to 3 week swing trade right now, being short, setting a short, not really going long over the 3 to 5 week plus time horizon until or unless we were to close above 360.53, which I'll get to in a moment. But for right now, it is playing the short side as we reach a critical longer-term resistance area. Now, that 351 handle resistance is both a former rising 2-year channel top. If you've been a follower of the Tesla report for the last year or so, you know that it was the pushing and settling above the structure back in November that set off a significant buy signal wherein we were anticipating the 513.95 year channel top. We rallied into the upper 480s, came close to it before collapsing back. And when we collapsed back, this area essentially held. I mean, there was a lot of slippage for a week, but it held for a week. And then the following week, we closed below it, and that set off the continued collapse to the April low. So we're right back at it again. 351.39 is also a 50% upside retracement from that December high of last year against the more recent April low. So this is a significant zone. And on an intra-week basis, I would call 360.53 the slippage factor where you can push through these areas without consequence. And at 360.53 combined with 351.39, narrowing daily, all converging over the next week or so into a single point, that is your short sale down to 285.55. Now, if we do close above 360.53 in the coming days, then yes, I am once again re-anticipating, if you will, 513.90 as a longer-term objective that I think would be in reach by the end of the year. I'm going to call this a 3 to 5 month signal. Now, there will be levels on the way up. I may already have them laid out for you. I do have a couple here. You have a 5/8 upside Fibonacci at 3 to 376. So if we push through and close above 360.53 today, first and foremost, as I've already said, you don't want to be short the market. You actually want to position yourself for the long side. But until then, I think you want to be setting a short position or at least staying out if you're only inclined to play the long side. So you can set a short in the 350s, 360s, but if we close above 360.53, we should within the week reach 383.76. We have this kind of gap area at 401.34. I would call that kind of a 1 to 2 week target, et cetera, et cetera, et cetera, on our way up into the low 500 region over the following 3 to 5 months. So that kind of covers the upside pretty well. In terms of the downside, I'm just going to jump to this chart here, and you can see that pullback low from last Thursday at 334.71. That's a pretty solid pivot point for the day. I don't know if we'll see it or not, but just know that holding below 351.39 will keep it in play perhaps. We've chosen all the minor points on the way down that are tradable for aggressive day traders. I call it an aggressive day trader, the day trader who's not looking for just the setup for the day, but they're actually trading kind of throughout the day, scalping several points here, several points there. Maybe you're looking at a 5-minute bar chart or a 30-minute bar chart for intraday signals. But These minor points are well suited for that type of trading. 334.71 though is our downward pivot point. So if we were to close, for instance, below 334.71, then I can anticipate 319.02 within 1 to 2 days, which is this former 3/8 Fibonacci. Did not perform very well to the upside, but I still respect it, at least right now, in terms of our proximity from it. In other words, if we were to say, close Monday below 334.71, I would anticipate 319.02 for Tuesday as a session containment level. But as we move through time, as we move into later week, this rising channel bottom at 307.76, which I have it as an intraday level, will claim sort of the session containment on the way up, especially as it converges with 319.02, and it will overtake 319.02 as our primary support level. But we're just not there yet with volatility and proximity. I'm just saying that, if we, for whatever reason, were to break 334.71 today, or perhaps even open below 334.71, we could test 319.02 on an intraday basis. And this is the level that I'm confident can contain daily selling pressures, but only for the day. I don't see this as a 3 to 5 day swing trade opportunity at 319.02. Now, later in the week, I probably will see 307.76 as a 3 to 5 day swing trade, as this is a rising channel bottom and does imply that since this a pullback low here from later April, that we could actually bottom out here for 3 to 5 days and round up, which is one of the reasons why I see that 285.85 as more of a 2 to 3 week possibility, because it allows us to bottom out at some point on the way down for a 3 to 5 day pop to the upside. And at this point in time, that 3 to 5 day pop is really this rising channel bottom at 307.76. So I just wasted a lot of air on something that's irrelevant for Monday, but at least you know what I'm thinking. So in terms of the big picture, once again, it is not being long in this vicinity until we close above 360.53. And then I think you can climb on board aggressively as we continue into June, July, and August activity. Until then, this is an area to stay out of the market. If you're more of a Tesla investor, near-term investor, or kind of a longer-term swing trader, 3 to 5 weeks out, you're just kind of watching from the sidelines. If you're only on the buy side, if you like to play both sides, and I'm not encouraging it, I'm just saying if that's something that you're adept at and accustomed to, this is the short sale zone. Begins in the low 350s and ends at 360.53. I know it's a wide zone now. For some of you, that's just a wide area to sell 351.39 and then stop out above 360.53. But as we continue through time, it does narrow and become a more convenient area. Bottom line though, holding below this 285.55 remains 2 to 3 week objective, where short positions can be covered and long entry pursued once again in anticipation of upward rotation back to the speed line at 360.53. We'll see about the low 350s as well. They will probably retain their importance. So, it is kind of a two-sided framework right now as we move through the rest of May and into early June, but it would be a settlement below 285.55 in the coming weeks that would then set up long-term support. Yes, in the 158.13 to 164.24 area. 285.55 is right about here on the chart. I'm kind of eyeballing it. So that is that rising channel bottom that I show here. That if we were to close below 285.55, which is right about here on the chart, we would expect a 2 to 3 month bearish continuation, a 2 to 3 month sell-off into the 158.13 to 164.24 area. So closing below 285.55, we're obviously there are going to be little levels all the way down. You have this kind of series of lows here in the upper 210s, low 220s that cannot be ignored for their ability to contain weekly selling pressures. But after testing long-term resistance, as we are now in the low 350s on this chart, you cannot discount the possibility for longer term bearish rotation. and longer term comes into play once again with a settlement in the coming weeks below 285.55, then expecting the upper 150s to mid 160s, 5-year channel support as a 2 to 3 month target or sooner, where we could bottom out through the rest of the year. I'm hitting 10 minutes right now. I'm going to leave it at that. I'll be back tomorrow, of course, with Tuesday's Tesla. Check out wickedstocks.com. We offer a 5-day free trial on all of our stuff. 2 stock picks a week, daily Triple Q, daily SPY, weekly Apple stock, weekly S&P 500, weekly NASDAQ 100. You can see it all for free by going to wickedstocks.com. I'll be back tomorrow with Tuesday's Tesla, and you have a great day.